Hey there, Iggy the Investing Iguana here. In this video, we're diving deep into the world of Singapore REITs, or S-REITs for short. I'll be breaking down the top players in the iEdge S-REIT Index, sharing some insights on what the future might hold for these real estate powerhouses, and giving you the latest updates on stock prices, company news, and analyst ratings. So buckle up and let's get started. The S-REITs landscape. Singapore has solidified its position as the go-to hub for real estate investment trusts in Asia. As of January 2024, the S-REIT sector was worth a staggering $100 billion, accounting for 12% of Singapore's total stock market value. That's a significant chunk compared to other Asian countries like Japan at 3.5%, Hong Kong at 3.3%, and China at 3.2%. The iEdge S-REIT Index is the benchmark for the sector, tracking the performance of 31 S-REITs. But here's the thing, the top 10 companies in the index hold a lot of weight due to their massive market value, making up nearly 70% of the index's weightage. Let's take a closer look at these top 10 REITs that are dominating the iEdge S-REIT Index. CapitaLand Integrated Commercial Trust, CICT. CapitaLand Integrated Commercial Trust, CICT, is a dominant force in the REIT sector, with a market capitalization of 13.5 billion Singapore dollars as of December 31, 2023. As of August 28, 2024, SIC's stock price stands at 2 Singapore dollars and 5 cents, representing a 2.5% increase from the previous month. This growth underscores the trust's robust portfolio, which includes 26 properties across Singapore, Germany, and Australia, with a total property value of 24.5 billion Singapore dollars. SIC's geographic and sector diversification has contributed to its resilience and consistent performance. Analysts maintain a bullish outlook on CICT, with a consensus buy rating and an average target price of 2 Singapore dollars and 30 cents, suggesting a potential upside of 12.2% from its current level. This positive sentiment is driven by SIC's strong market position, quality assets, and effective management strategies. The trust's focus on proactive portfolio management and its ability to adapt to changing market conditions have contributed to its success. As the largest proxy for Singapore's commercial real estate market, CICT is an attractive option for investors seeking exposure to the country's property sector. CapitaLand Ascendas REITs, CLAR. CapitaLand Ascendas REITs, CLAR, is a dominant force in the REIT sector, commanding a substantial market capitalization of 11.9 billion Singapore dollars. As of August 28, 2024, its stock price stands at 2 Singapore dollars and 95 cents, reflecting a 1.7% increase from the previous month. This growth underscores the trust's robust portfolio, which encompasses a diverse range of properties including business spaces, industrial facilities, and data centers across Singapore, Australia, the United States, and the United Kingdom/Europe. With a focus on providing cutting-edge spaces for businesses in various sectors, including technology and logistics, CapitaLand Ascendas REITs has solidified its position as a leading and innovative REITs. Analysts have assigned a buy rating to the trust, indicating a positive outlook, and have set a target price of 3 Singapore dollars and 20 cents. This suggests a potential upside of approximately 8.5% from its current level, reflecting analysts' confidence in the trust's continued growth trajectory. This optimistic forecast is driven by CLAR's strong asset management strategies, strategic acquisitions in key markets, and its commitment to delivering sustainable returns to unit holders. Mapletree Industrial Trust. Mapletree Industrial Trust is a significant player in the REIT sector, boasting a market capitalization of 6.2 billion Singapore dollars. As of August 28, 2024, its stock price has risen to 2 Singapore dollars and 80 cents, representing a notable 3.3% increase from the previous month. This steady growth is a testament to the trust's strong performance, driven by its diversified portfolio of industrial properties, including data centers, logistics facilities, and high-tech buildings. While analysts have maintained a hold rating on Mapletree Industrial Trust, they have set a target price of 2 Singapore dollars and 90 cents. Indicating a potential upside of approximately 3.6% from its current level. This suggests that analysts believe the trust's growth will continue, albeit at a moderate pace. Mapletree Industrial Trust's focus on innovation and adaptability has enabled it to stay ahead in the rapidly evolving industrial real estate landscape, making it a stalwart in the sector. Mapletree Logistics Trust. Mapletree Logistics Trust is a dominant player in the REIT sector, boasting a market capitalization of 6.4 billion Singapore dollars. As of August 28, 2024, its stock price has risen to $1.75, representing a notable 2.9% increase from the previous month. This growth is a testament to the trust's strong performance, driven by its extensive portfolio of logistics properties, including warehouses, distribution centers, and container depots. With a focus on e-commerce and supply chain management, Mapletree Logistics Trust has positioned itself to capitalize on the growing demand for efficient logistics solutions. Analysts have taken notice, assigning a buy rating and setting a target price of $1.90, indicating a potential upside of approximately 8.6% from its current level. This optimism is likely fueled by the trust's successful expansion into new markets, solid tenant relationships, and commitment to sustainability initiatives, all of which have contributed to its reputation as a reliable and forward-thinking logistics REITs. Fraser's Logistics and AMP Commercial Trust. Fraser's Logistics and AMP Commercial Trust, FLCT, is a significant player in the S-REIT sector, with a market capitalization of 4.06 billion Singapore dollars as of August 28, 2024. The trust's stock price stands at $1.03, representing a 4.57% increase year-to-date and a 0.98% increase over the past 5 days. FLCT boasts a diversified portfolio of 112 logistics, industrial, and commercial properties valued at approximately 6.9 billion Singapore dollars across 5 major developed markets. The trust's focus on providing high-quality spaces for businesses has contributed to its strong operational metrics, with a high portfolio occupancy of 95% and over 90,000 SQM of space leased out in the third quarter of the 2024 financial year. Analysts have a buy rating on FLCT, with a consensus target price of $1.42, suggesting a potential upside of 40.91% from its current level. The trust offers an attractive dividend yield of 6.8%, making it an appealing option for income-seeking investors. With its robust operational metrics and prudent financial management, FLCT is well-positioned for future growth despite the challenges posed by the high-interest rate environment. Mapletree Pan-Asia Commercial Trust. Mapletree Pan-Asia Commercial Trust is a prominent player in the REIT sector, boasting a market capitalization of 5.4 billion Singapore dollars. As of August 28, 2024, its stock price has risen to $1.23, representing a modest 2.5% increase from the previous month. This steady growth is a testament to the trust's diversified portfolio, which spans across commercial and retail properties, including offices, shopping malls, and mixed-use developments. With a focus on providing high-quality spaces for businesses and consumers alike, Mapletree Pan-Asia Commercial Trust has established itself as a reliable and versatile REIT. Analysts have maintained a buy rating on the trust, indicating a positive outlook, and have set a target price of $1.35, suggesting a potential upside of approximately 9.8% from its current level. This suggests that analysts believe the trust's growth will continue, driven by its strong property management capabilities, strategic acquisitions, and commitment to enhancing shareholder value, as well as its exposure to the growing demand for commercial and retail spaces in the Pan-Asian region. Fraser's Centrepoint Trust. Mapletree Pan-Asia Commercial Trust, Impact, is a significant player in the REIT sector, with a market capitalization of 6.94 billion Singapore dollars as of August 23, 2024. The trust's portfolio comprises 17 quality commercial properties across 5 key gateway markets in Asia, including Singapore, China, Hong Kong, Japan, and South Korea. Despite challenging market conditions, Impact has demonstrated resilience in its financial performance for the first quarter of the fiscal year 2024/2025. The trust maintained its gross revenue and net property income, primarily driven by its robust Singapore portfolio. However, the trust's distribution per unit, DPU, for the quarter was 4.1% lower year-on-year at 2.09 Singapore cents, reflecting the impact of increased finance costs in the current high-interest rate environment. Analysts remain optimistic about Impact's future performance, with a consensus target price of 1.500 Singapore dollars, representing a potential upside of 18.11% from its current level. The trust's strong portfolio, diversified across key Asian markets, and its proactive management approach are expected to drive its growth in the coming years. Additionally, potential interest rate cuts in the near future could further boost Impact's performance by reducing financing costs and increasing property valuations. CapitaLand Trust. CapitaLand Trust, Class, is a prominent player in the REIT sector, with a market capitalization of 3.3 billion Singapore dollars. As of August 16, 2024, its stock price stands at 86 cents, remaining stable compared to the previous month. This steady performance is a reflection of the Trust's diversified portfolio, which comprises serviced residences, rental housing properties, student accommodation, and other hospitality assets across Asia-Pacific, Europe, and the United States. With a focus on delivering stable and sustainable returns to its stapled security holders, CapitaLand Trust has established itself as a reliable and well-managed REIT. Analysts have maintained a consensus outperform rating on the trust, indicating a positive outlook. The average target price is set at 1.091 Singapore dollars, suggesting a potential upside of approximately 26.9% from its current level. This suggests that analysts believe the trust's growth will continue, driven by its strong operating performance, strategic portfolio reconstitution, and commitment to enhancing shareholder value. CapitaLand Trust's promising start to 2024, with a 15% year-on-year increase in gross profit for the first quarter, further underscores its resilience and ability to adapt to dynamic market conditions. As the trust leverages its diversified portfolio and prudent capital management to navigate future market cycles, it remains well-positioned to capitalize on growth opportunities and deliver sustainable returns to its investors. Keppel DC REITs. Keppel DC REITs, a prominent data center REIT, has a market capitalization of 3.1 billion Singapore dollars as of August 28, 2024. The REIT's stock price stands at 2 Singapore dollars and 13 cents, having reached a high of 2 Singapore dollars and 15 cents and opened at 2 Singapore dollars and 13 cents on the same day. This represents a notable increase from the previous month's closing price of 1 Singapore dollar and 95 cents. Keppel DC REIT's portfolio comprises 22 data centers across 9 countries, including Singapore, Australia, China, Malaysia, Germany, Ireland, Italy, the Netherlands, and the United Kingdom. With approximately 3.7 billion Singapore dollars in assets under management, the REIT has established itself as a key player in the data center industry. Analysts remain bullish on Keppel DC REITs, with a consensus target price of 1 Singapore dollar and 97 cents, despite a slight downside from the current price. This optimism is driven by the REIT's strong portfolio performance, which boasts a high occupancy rate of 98.3% and a weighted average lease expiry of 7.6 years. The REIT's resilience is further demonstrated by its stable year-on-year portfolio asset valuation, supported by the growing demand for data centers as the digital economy continues to expand. With a robust balance sheet and active portfolio optimization strategies, Keppel DC REITs is well-positioned to pursue growth opportunities in key international data center hubs. Keppel REITs. Keppel REITs is a prominent player in the S-REIT sector, with a portfolio value exceeding 9 billion Singapore dollars as of December 31, 2023. The REIT's portfolio consists of 13 high-quality commercial properties strategically located in key business districts across Singapore, Australia, South Korea, and Japan. As of August 28, 2024, Keppel REIT's unit price stands at 0.885 Singapore dollars, with a slight decrease of 1 cent from the previous trading day. The REIT's highest closing price in 2023 was 98 cents, while the lowest closing price was 79 cents, with an average closing price of 88 cents. Analysts maintain a positive outlook on Keppel REITs, with a consensus rating of moderate buy. The average 12-month price target for Keppel REITs is 81 cents, representing a potential upside of 25.89% from its current price. For the first half of 2024, 1H 2024, Keppel REITs reported an 8.9% year-on-year increase in property income to 125.1 million Singapore dollars and an 8% year-on-year growth in net property income, NPI, attributable to unit holders, reaching 87.2 million Singapore dollars. However, borrowing costs surged by nearly 30% year-on-year to 49.3 million Singapore dollars, leading to a 3.4% year-on-year decline in distribution per unit, DPU, to 0.028 Singapore dollars, after accounting for the anniversary distribution of 10 million Singapore dollars. With its well-diversified portfolio, strong occupancy rates, and proactive management approach, Keppel REITs is well-positioned to navigate the challenges posed by the current market environment and deliver sustainable returns to its unit holders. The interest rate factor. The interest rate factor has been a significant challenge for the S-REITs industry since late 2022, but there may be a glimmer of hope on the horizon. The U.S. Federal Reserve has hinted at a potential rate cut in the near future, which could be a game-changer for S-REITs. According to a recent report by RHB Securities, the markets are now anticipating at least 3 Fed interest rate cuts in 2024, up from just 1 in June. This shift in expectations has led to a more optimistic outlook for S-REITs, with predictions of outperformance in the second half of 2024 and into 2025. The potential rate cuts could have a trio of positive effects on S-REITs. Firstly, lower interest rates would lead to lower financing costs, making it easier for S-REITs to borrow and invest in new properties. Secondly, lower interest rates would result in higher dividend yield spreads over bonds, making S-REITs a more attractive option for income-seeking investors. Finally, lower interest rates would lead to higher property valuations as cap rates compress, allowing S-REITs to benefit from increased asset values. Analyst forecasts. Looking ahead, analysts remain optimistic about the S-REIT sector, with RHB Securities maintaining an overweight rating and a preference for retail and hospitality REITs. They believe that a combination of factors will drive the sector's performance, including a pickup in the economy, asset recycling, and interest rate cuts. These catalysts are expected to boost the sector's growth and lead to higher rental reversions. Among their top picks are CapitaLand Ascendas REITs, CLAR/OUE REITs, and CapitaLand Escott Trust, which offer attractive valuations and the potential for higher rental income. These REITs are well positioned to benefit from the sector's growth, with strong portfolios and effective management strategies in place. Additionally, they offer diversification benefits, with exposure to different asset classes and geographies, making them attractive options for investors seeking to tap into the S-REIT sector's potential. Overall, analysts are bullish on the sector's prospects, with an expected total return of 10 to 15% in the next 12 months, driven by a combination of capital appreciation and dividend yields. Wrapping up. So there you have it, a comprehensive look at the top S-REITs, the latest market updates, and what the future might hold for these real estate giants. As interest rates potentially cool off and the economy picks up steam, S-REITs could be poised for a strong recovery. If you found this video insightful, be sure to smash that like button and subscribe to the Investing Iguana for more in-depth analysis and expert opinions on the world of finance and investing. Remember, staying informed is key to making smart investment decisions. Until next time, this is Iggy signing off.